Investment products are not FDIC insured or bank guaranteed and may lose value. Hello, and welcome to Markets in a Minute. I'm Shawn Snyder, Head of Investment Strategy for Citi Personal Wealth Management. I think it's safe to say that we are living in unusual times right now. Britain is planning to leave the European Union, and the US presidential election clearly has many on edge. So what should an investor do to prepare for such unusual events? In most cases, the answer is to remain calm, and for many, the surprising answer may be to do nothing. In fact, making rash decisions during a time of market stress can actually do more harm to your portfolio than good. Think back to the start of this year when the S&P 500 was down about 10% due to a global recession scare. If you sold your stocks and moved into cash on February 8th, when things looked their worst, you essentially locked in about a 10% loss. If instead you went on vacation, turned off your electronics, and came back to work in mid-March, you would have thought that nothing had happened. And if you stayed invested in the S&P 500 through the rest of the year, you would now be up about 7% year-to-date when dividends are included. The fact is that intra-year market corrections are fairly common and a part of investing. We get it. When news headlines say that stocks soar or stocks plunge, it's only natural to get nervous. If you got on an elevator with two buttons, with one saying soar and one saying plunge, that's probably not a ride that you want to take. However, we think it's important that investors realize that historically, the best way to have built wealth is gradually over time and through a diversified portfolio. Getting started early, being consistent, and staying invested with the right level of portfolio diversification is by far more important than any one market event. In general, we recommend that investors review their portfolio exposures about twice a year. If you own individual stocks or have a more risky portfolio, perhaps a quarterly review is better. It's also important to remember that the main point of a portfolio review is not to make drastic changes, but more to ensure that your portfolio still represents your desired level of risk and still properly diversified. For example, in July, our Global Investment Committee moved from an overweight on U.S. stocks down to a neutral weighting because of rising political risks and the fact that we are 7 years deep into the U.S. economic recovery. If you haven't looked at your portfolio in a long time, you might have missed this change and find that you're over-allocating to stocks. If you haven't done a portfolio check recently, we would encourage you to do so while markets are relatively calm. After all, it's much easier to make decisions when you're calm than when you're reacting to stressful events. If you have any questions about the current level of risk in your portfolio, or whether or not it is properly diversified, or are seeking other advice about your financial future, please feel free to contact a Citi Personal Wealth Management financial advisor today. For more market insights, please check out our investing page on Citibank Online. Once again, I'm Shawn Snyder, and thank you for watching today's Markets in a Minute.